What if I told you that one guy trading from his parents' bedroom in a London suburb could bring the entire US stock market to its knees? It really does sound like the plot of a movie, right? But nope, it's the bizarre and totally true story of Navinder Singh Sarao, the trader at the very center of one of the most insane financial events in modern history. Okay, so picture this. It's April 2015, a quiet, normal suburban street in Hounslow, West London. All of a sudden, agents from the FBI and Britain's Metropolitan Police are swarming this one modest house. And who are they after? A 36-year-old man in baggy sweatpants who they say caused a $1 trillion stock market crash 5 years earlier. Wild. So who was this guy? The media had a great name for him, the Phantom of Hounslow. And honestly, the more investigators started digging into his life, the more mysterious and frankly contradictory he seemed to be. And this is where it gets really weird. We're talking about a total split personality. On one hand, his own brokers called him a shy pussycat, a guy so absent-minded he'd literally get lost just trying to find their office. But then you talk to the employees at the Chicago Mercantile Exchange, and they tell stories about this terrifying figure who, in a thick London accent, once threatened to cut off a man's thumbs. Who is this person? To really get how he ended up here, we've got to rewind a bit. Because Sarah wasn't just some random dude who got lucky. He was, in a lot of ways, a natural-born prodigy with this very specific set of skills that made him almost perfectly built for the world of high-speed trading. So, get this. As a kid, he could multiply huge numbers in his head faster than people could punch them into a calculator. He had this incredible focus and ability to spot patterns, which, by the way, also made him a globally ranked player of the FIFA video game. And when you think about it, that mental speed, the hand-eye coordination, the hyperfocus, it was like the perfect training ground for becoming a trading phenom. So you've got this fascinating split identity going on. In the real world, he's shy, he's awkward, totally unassuming. But online? Online, he becomes, that's a Fugazi, this super brash alter ego who just loved bragging about his own genius and mocking all the other traders for being followers. And this was his actual signature on trading forums. I mean, it tells you everything you need to know about his mindset, right? He saw himself as the shepherd, and every single other person was just a mindless sheep following the herd. He was convinced he was smarter than the market and smarter than everyone in it, so he decided to build a weapon to prove it. Now, Sarasota was walking into a world that was being taken over by high-frequency trading algorithms, HFTs. He just called them the geeks. And he was absolutely convinced the whole game was rigged against him. So he thought, fine, if you can't beat him, build a better machine to fight back. His weapon of choice? Well, it was a very controversial and very illegal technique at the heart of this entire story. Spoofing. But what does that actually mean? Okay, put simply, spoofing is basically a high-tech version of a trick you'd see on the playground. You know, you go to give someone a high five and they pull their hand away at the very last second. It's exactly that, but with billions of dollars. You place huge orders to buy or sell. You trick everyone into thinking the market's about to move one way, and then you pull those orders before they ever actually go through. It's a head fake. Here's how he did it, in 3 simple steps. First, Soraya would drop these massive, fake orders into the system to create this false sense of momentum. Step 2, all the other traders, especially those super fast algorithms, would see this mirage and immediately react to it. And finally, in a fraction of a second, he'd cancel his fake orders and place a real one to profit from the price swing he just manufactured. To him, this wasn't cheating. It was just leveling a playing field he felt was already rigged by the geeks. And all of this, it comes to a massive head on one absolutely insane afternoon, May 6th, 2010. This is the day the financial world will forever know as the flash crash. In just a few minutes, nearly $1 trillion in market value just vanished. Poof, gone. The Dow Jones plunged almost 1,000 points, at the time its biggest intraday drop in history. You can just imagine the panic sweeping across trading floors all over the world. The chaos was just absolute. I mean, blue chip stocks like Procter & Gamble were in free fall. And for a split second, shares in the huge consulting firm Accenture were trading for a single penny. A penny. It was a complete and total breakdown of market logic. So where does our guy fit into all this chaos? Well, according to US regulators, his spoofing program was just hammering the market with enormous fake sell orders.
Think of it like a giant invisible weight being slammed down on one side of a scale. By creating this massive fake selling pressure, Bay he created a huge imbalance in the market, which helped create the instability that let the crash just spiral out of control.
After his arrest, everybody wanted to know one thing. Where were the tens of millions of dollars he'd made? And the answer? Oh man, the answer is maybe the greatest irony in this whole story. The master manipulator had himself been completely manipulated. So while Sario is sitting in a London prison, unable to even make his £5 million bail, his lawyers make this shocking discovery. They find out that pretty much all of his money, which had grown to around $65 million, had been invested with this mysterious financer named Jesus Garcia Alvarez, and every single cent was gone, vanished. This Garcia guy, turns out, was a world-class con artist. He was posing as a Mexican agricultural magnate. He claimed he controlled all of Bolivia's quinoa and white gold lithium reserves. He'd even been accused of trying to defraud the Central Bank of Mongolia. Sarao, the trading genius, had been completely played in the real world, handing over his entire fortune to this elaborate fraud. And that brings us right back to the central question, the one that defined his trial and that everyone was fascinated by. Was this guy a calculated criminal mastermind, or was he a socially inept misfit who just didn't understand the rules of the game? The arguments on both sides were really compelling. You had his defense painting him as this idiot savant with Asperger's syndrome, a brilliant trader who just couldn't grasp social cues or the real-world impact of what he was doing. They said he was just a convenient scapegoat for a system that was already broken. But then, the prosecution told a very different story. They showed emails where Soros seemed to be bragging about his ability to manipulate the market. And, of course, there was the $40 million he made doing it. But the story doesn't end there. Oh no, there's one last incredible twist. Sirocco cut a deal. In exchange for a pretty lenient sentence, which ended up being just a year of home confinement, he agreed to cooperate. His skills were so unique and so valuable that the U.S. government had him teach them how to catch other market manipulators. The poacher quite literally turned gamekeeper. And that leaves us with the ultimate question, doesn't it? Was Navsaro a criminal who broke the rules? Was he a scapegoat for a financial system that nobody really understands? Or was he just a uniquely gifted player who figured out how to win a game that a lot of people think was already rigged from the start? What you decide says as much about our modern markets as it does about the Phantom of Hounslow.